Assalamu alaikum and hello friends. Welcome to our today's video. In this video, I have brought you the most important subject of our discussion, which is what are the halal mutual funds of 2026? If you want to invest in the Indian market, if you want to invest in the halal funds in India, what are those funds? What are the various characteristics of the funds? I'm going to explain all of these details step by step in our today's video. So watch the video till the end. And this will be a longer video, around 30 minutes will be the length of this video. So watch it till the end. And I've also put the caption options of chapters in the description from where you can able to check it out. And also we have a Hindi channel as well. If you want to watch the same video in Hindi, I will give the link in the description. You can able to watch the Hindi version as well. And if you want to watch the English version, you can subscribe to the exact channel. And if you are interested in English Hindi version, you can subscribe to my channel, which is MD Azhar Investing in Hindi. This is our English channel. So let's begin our today's topic of discussion of what are the mutual funds which are in India, which are Sharia compliant and halal in India. Now I'm sharing my screen with you, so you can see the screen now. And before we start the subject, let me give you a clear disclaimer. This video is created for educational and informational purpose only. This is not an investment advice. I recommend you to please do your own research and speak to your financial advisor before making any decision for investing. This video is purely for informational purpose only. Now, let's start with the concept. What are the topics I'm going to cover in this session today? So first, I'm going to start with the concept of what is halal or Sharia compliant investing principles. Then we'll discuss about how Sharia screening works. Then we will discuss about Sharia boards. What are the different Sharia boards we have? And then we will discuss about mutual fund terminology. Then overview of Sharia compliant funds in India and what are the different funds we have and how to invest in various mutual funds. What is the process? And then finally, I will give you my personal opinion at the end. So these are the topics, will be very detailed. I'm going to step by step explain about each and every topic. So let's start with the first subject of the day. What is Sharia compliant investing or what is halal investing? What do you mean by halal investing? Now, very simple rules are there. If you want to invest in stock market in a halal way, what are the basic principles you have to follow? The business where you are investing now. Investment that follows Islamic principles, which avoids riba, which is interest, gharar, which is excessive uncertainty, and haram industry like alcohol, gambling, pork, and conventional banking and insurance, which means to invest in a company as per the Islamic rules and principles, it should not be operating in haram business. Okay, that's the rule number one. Rule number two is we also have to filter out those companies which have excessive debt, who have a lot of debt. They have a lot of, in Hindi we call it as a curse. Okay, so debt should not be there. And also it should not have a lot of interest income. Now, various Sharia boards have developed their own strategy here. Some Sharia boards use the ratio called as a DE ratio. Some Sharia boards use DE ratio. There's a debt to equity ratio. Some Sharia boards use debt to market cap ratio to filter out the bad companies or which have excessive debt. And number three is some companies use debt to assets ratio, which is basically again using assets of the company as a factor for measuring. So you can use any of these different Sharia boards have different strategies here. And also interest income should not be more than 5% of the overall income. That is also one threshold used by most of the companies in Sharia board, most of the Sharia boards in general. And also the fund which we are investing, is it also managed by a Sharia board? So do they have a certification of a Sharia board? If you are investing in a fund, that aspect also is considered for mutual fund. So basically, halal investing and halal mutual fund is basically a simple concept where we are investing in the right companies which are as per Islamic point of view in the proper companies they invest, and also they follow certain basic rules of investing. Now, moving forward, what is a Sharia board? What is a Sharia board? What is their job? What do they do? Now, see, a Sharia board is basically a advisory community or a board which has scholars in it, which are very high level of scholars, which have extremely high, intellectual, financial specialists will be there, and also technical people will be there. And what this board will do is they will analyze, they will build some rules, okay, based on Islamic principle. They develop some rules and based on those rules, they approve what are the companies which follow the specific standard, and based on that they mark them as a halal company, and then they monitor the funds on a regular basis and guiding purification of non-permissible income. If that particular mutual fund has some income from impermissible sources, because every company will have some impermissible income also, little bit of that will be there, so we can also filter that out with the help of method called as purification. So this entire process is taken care by a Sharia board, which is a governing body which will take care of all these options. Now, what are the Sharia boards available for us to review or to check? Now, some of the Sharia boards which I have seen, which I know, one of the very old one in India is called as TASIS, TASIS. You can check the website, you can Google it and you'll get the details. And second is Islamically, which has a website as well as app, and they also give reviews about individual stocks as well as mutual funds. And Islamic Stock Screener, this is basically a free version, but it's most for Indian market. Islamically is available in many different countries. Musafa is also an app which is available in India market as well as foreign markets. And Sharia Cap Advisory Board, this is also a news group of advisors which are advising for various mutual fund companies. So these are different Sharia boards. And one point you have to always remember, there will be a small mismatch. Whenever you take any halal fund, one or two stocks you will see in that, which maybe one Sharia board is saying this is halal, but other Sharia board will say, no, this doesn't match with our rules and regulations. So there will be a small mismatch will always be there, because each Sharia board has their own set of rules they have deducted based on the Islamic principles. So there will be a slight changes or small, mismatches in the process. So you have to bear with that particular option. Based on that, you should not think that it's a conflicting process. Okay, it's basically some little bit of issues, a little bit of mismatches will always be there. But if you follow a specific Sharia board and you follow their advice, it's okay. Ulama says, scholars says that it's fine. You can follow one board, and if there is a light mismatch, it is okay. You can later do the purification of that mismatch of the stocks of that particular fund section. So that way we have to handle this issue. Now let's go ahead and how these funds actually work. How these funds are created by various AMCs. How do they develop the funds? So there is a simple process. Number one, Sharia board provides a list based on Sharia guidelines, based on their methodology. They give the company a stock list, that these are the stocks which are halal stock in which you can invest. Now, the fund manager, the mutual fund company, will create the fund based on the specific selected stocks. Now, whatever the stocks they have given as a halal, then they will be selecting from them based on their fundamental and other factors. And then Sharia advisory boards provide ongoing certification and rebalancing rules. If some stock become non-halal, then Sharia board will advise the AMC to remove that stock. So they will be ongoing providing the certification for the given mutual fund as well. And then some funds use exclusion or purification mechanism to handle incidental interest income. Just as I told you, many companies, even if they don't want that income, but some way or the other, they will get some interest income from banks or from somewhere. So for that income, which is not pure for us, okay, so they will be using a method of purification or exclusion they will do, so that income, we can give it as a charity to anybody out. So that way, purification also can be possible. And some funds are created based on Sharia index. Remember, there is no actively managing advisory board for certain fund. I'll show you one fund is there in our list. So where the active management is not done, it is based on the Sharia index of Nifty Sharia index, 500 Sharia index, or BSE 500 Sharia index. So this is how the fund process actually goes out. Now, what are the funds in India? Which are, our compliant funds in India? Now here, I would first give you the details of each fund. The first is the Tata Ethical Fund, which is equity fund. Equity fund is no debt, no other kind of investment, only equity investment, and advised by TASIS. Okay, that is the main advisory board. Taurus Ethical Fund is actually, earlier they were not having advisory, now they have a Sharia Cap as their advisor. So this is also advised by a advisory. And then Quantum Ethical Fund, which is an equity fund advised by Sharia Cap advisors. For both this is the Sharia Cap advisors is the advisory board. And then Nippon India ETF Sharia Base, ETF Tracking Sharia Index. Now this I told you, remember there is no Sharia board for Nippon India Nifty Sharia Base, which is basically a ETF, the exchange traded fund, which is tracked by the Sharia index. So, a particular fund is better. Which fund has a better return value? Now, to understand that, you have to understand a basic concept of mutual fund. If you are a beginner, you have no idea what is a mutual fund. Okay. Now I'm telling you, mutual fund basically is a fund where your money is invested by an AMC. Your money is taken from multiple investors. Money is taken and is invested in a group of stocks. That's the idea of mutual fund. Now, what is the basic terminology you have to know? Now, let me go through one by one. Open and close fund. Now, open fund means you can invest anytime, you can remove your money anytime. You can enter and exit whenever you want. That's called as open fund. And close-ended fund means you can invest now, but you cannot exit from it. You will have a duration. Until the duration, you have to be in the fund. That's called as close-ended fund. Most of our funds are open-ended funds. Now, second is called as direct investment and regular fund. Direct fund means you invest directly yourself, and where the amount of fees you have to pay is less. And regular fund means you go via a distributor. Mutual funds have distributor. So you go via a distributor, and for this distributor, you have to pay an extra amount of fees. So I will recommend always to go with the direct version. Regular is required when you are taking advisory from somebody, okay, a professional individual. Then they will get your services via regular fund only. So they will get their commission from your advisory process by using the regular fund. And then we again fund will have two types: growth fund or IDCW, income distribution cum capital withdrawal. The growth fund means whatever money we make from the fund. Suppose the stocks has been appreciated and we have got some dividends and everybody will get the money from it. So that money will not be given to you in growth. It will be reinvested in the fund. Whereas in IDCW, every quarter or every 2 quarters, whenever there is a income, that income will be distributed back to the fund holders. This is IDCW. Now, one of the way to calculate CAGR, this is a metric to calculate the return. For example, in last 5 years, I have got a return of some X amount. Now, how do I know per year what is my return? So this compounded annual growth rate, CAGR, will give me the return of every year. Sometimes 1 year may be high, 1 year may be low, 1 year may be high, 1 year will be low. But I want to calculate for 5 years or 10 years together for all years average. So then I will get compounded average annual growth rate, compounded annual growth rate. And benchmark is a way to measure when you are taking a fund. This fund is matching with which fund? Which one you want to take as like a benchmark value, and it's the standard deviation of every fund. You will have this in the documents. So how the fund returns fluctuate? What is a fluctuation? If the fluctuation is high, your stocks are fluctuating very much. It means there is a huge up and down in your fund. SG is low value, which means your funds are not fluctuating a lot. Then a very important thing called as beta. Now beta is sensitivity to market movements, meaning how high is the sensitivity of your fund to the market movements. Now, beta should be on the lower side. SG should be on the lower side. The fund is very good. And beta should also be on the lower side, meaning your fund doesn't fluctuate as per the market fluctuation. It has a diversified option. So in that case, you can say beta should be lower value. And Sharpe ratio is basically return earned per unit of risk. Now, Sharpe ratio should be on the higher side. The higher the Sharpe ratio, it means that you are taking a risk, but you are getting a better return. So the Sharpe value should be, less than 1 means it's not that great, but 1 to 1.5 is very good, and 1.5 and above is very, very good result we are getting with the help of the Sharpe ratio. We can find that out. And expense ratio is annual fee of the fund. Whatever you invest in mutual fund, the fund organization, the fund which is managing your entire mutual fund is called as an AMC, asset management company. They will charge you a fee which is called as expense ratio. You have to keep that into consideration while calculating your returns. And exit load, fees for exiting stock before a duration. I told you most of the funds are open, but even though they are open funds, there is one consideration you have to do. It's called as the exit load. If you exit in a stock before a specific duration, then they will charge you an extra fee, which is called as an exit load. So this is the basic terminology. And with that basic terminology, let us go ahead and see how we can able to understand each of the fund which we are discussing. Now, the first fund in front of you is Tata Ethical Fund, one of the oldest fund which was started in 1996. And today, 1 unit, NAV, 1 unit is worth 444.57 as of the day I've created this PPT. And you see it's going up from 2014, around it was at 2014-15, between it was 100, which went up by 2025 went up to 486, almost 4.8 times it has grown in the last 10 years. So it's a very phenomenal growth, okay? And the asset under management, AUM, is total amount of money invested in the fund, 3,771.8 crore, which keeps increasing every month. And this is one of the biggest AUM. I can tell you Tata Ethical Fund is the biggest Sharia-compliant fund in India with the highest value of 3,771.8 crore. And CAGR is also very good, which is almost 5 years CAGR on an average. It's giving us 13.85 return per year, which is excellent CAGR, and expense ratio is 0.65. So whatever you invest every year, 0.65% will be taken as a fee by the fund company. And exit load, if you buy some stock and you exit before 90 days, if you buy some mutual fund units and exit before 90 days, okay, you have to pay an extra penalty of 0.5%. That is also an extra penalty. Apart from your expense ratio, you have to also pay 0.5% of exit load. And as I said, SG 12.63, okay, it should not be like 14, 15, is considered very, very high. Now, Sharpe ratio 0.53, not that good. It should be higher than 1, it's considered as very good. And beta is almost 0.8, which is almost close to 1, which means our stock fluctuates as per the market fluctuation, but little bit lesser. So it's fine, the fluctuation is not there as the market fluctuation is there. So this is the Tata Ethical Fund and its various details. And as I said, this video I create for educational and informational purpose. My job is to give you the education and information. You make a decision based on the data, based on the facts which I'm showing you on the screen. Second one, Towers Ethical Fund. It was started in 2009 and it was in 2014 at a value of 30, and it went up to a value of 155, and NAV is 144.62 and AUM is 370.14 crore compared to Tata Ethical Fund, which is very low, and CAGR is actually better than Tata, which is 14.07%, because you see this fund actually goes up and down very rapidly, okay? And beta is telling you 0.95. Tata Ethical Fund beta was 0.8. Market, if it grows very high, Tata will go but a little bit slower. Whereas here, the Towers Ethical Fund, what I have noticed, if the market jumps high, this fund also jumps very high. And the market falls very badly, then this fund will also fall very badly. So beta is almost 0.95, which is pretty almost close to 1, okay? Now, AUM is this, and expense ratio is a bit higher than Tata, which is 0.95, and exit load is 1%, which is very high compared to Tata, which is 0.5 in Tata, and it is 365 days is the minimum holding period. After that, if you sell, then you have to pay for, if you sell before that, you have to pay for 1% of the value of the amount you are selling. And SD is 14.24, which is on the higher side, and Sharpe ratio is lower, which is we are taking higher risk, but still the return, our unit of amount of risk we are taking based on the return is okay, but risk is also very high here. So 0.58 is a lower value. Sharpe should be higher, and beta is 0.95, which means fluctuation will be very, very wild fluctuation. That's why if you notice here, the graph also shows you a very huge and wild fluctuation. So it fluctuates a lot. So this is Towers Ethical Fund, the second fund. Number 3, Quantum Ethical Fund. This is a recently launched fund in December 2024. And NAV is 9.78, which is a new fund. We don't have much data. So CAGR we don't have. Expense ratio 0.75%. And exit load is 1%. Now, why I have written star here is, keep this in mind. This fund have different variations for exit load. You can check the scheme document, which I will share in the description. Read the document. In that, you will understand for how many units, if you sell based on that, they will charge you a different amount of fees. So that is Quantum Ethical Fund. It's a new fund, so we cannot talk a lot about this particular fund. And Nippon India ETF Nifty 50 Sharia base. This is basically based on the Nifty 50 Sharia funds. So Sharia stocks, this is the ETF. And this started in 2009 and NAV is 516.57 and AUM is 52 crore and CAGR is 10.06, which is quite on the lower side. Expense ratio is 0.91%, which is quite high for an ETF, and exit load is not there, and P ratio is 25. Now, why we are not taking Sharpe and SG and all the factors? Because here it's basically an ETF, so it's counted as a stocks basically. So 25 is the P ratio, and price to book value is 4.47, beta is 0.8. which is on the higher side. As for market fluctuation, this will also fluctuate very much. So this is the data of the Nifty 50 Sharia Bs. Now, how do we invest in that? How do we invest in any fund of this particular funds? How can I invest? How can I go ahead and invest into the specific fund? Now, first thing, you have to decide whether you want to go with a direct plan or a regular plan. Now, direct plan means you can directly go and invest. Okay, you don't need anyone's advice. But if you contact a mutual fund distributor who is a professional who has a certification, or if you contact a registered advisor, semi-registered advisor, he will speak to you. He will give you an advice based on your requirement, based on your goals. He will give you what funds are best for you. So you go with a regular or a direct. Now, personally, I go with the direct fund itself. Now, the second thing you have to decide is, do you want to invest directly on a website? We can actually invest directly from Tata Ethical or any of these websites. Or if you already have a brokerage account like Zerodha or Grow or any account, you can invest via a broker as well. So both options I'm going to now show you practically. So just wait for a few seconds in the screen. I'll load my browser. Alright, so I want to invest in Tata Ethical Fund. Okay, so just go to Tata Ethical Fund, the first page. Now this is the official website of Tata Ethical. So just click on Start Investing, and here you enter your PAN number and click on I'm not a robot and proceed. And here you have to create your entire account. You have to do the verification, your personal name and all the bank, everything verification. And you can start investing directly in the Tata Ethical Mutual Fund yourself without even a demat account. You can directly invest from the website itself of Tata. And your money will be stored, your money will be, whatever returns you get, that will be reflected in your account directly. Now, this doesn't have need of any demat account. But, no sir, I already have a Zerodha account, already I have a Grow account. So what I should do is, in that case, I will go to coin.zerodha.com. And again, I'm a user in this. Now, I have recently, redeemed many of my old mutual funds due to some personal requirements. So that's why I don't have much funds here. So this is the fund where you can just go ahead and click on. So I'm looking for Tata Ethical Fund. As we have both growth as well as EDCW. So you can go with the Tata Ethical Fund growth value and select the first fund. And from here, you can go with a lump sum investment or an SIP investment. So if I'm going for a buy lump sum, so you can say I'm looking for, let's say 50K or whatever the amount you want. Minimum is 5,000 in this app. So let's say I want to invest 5,000 rupees here. So I can go with the lump sum. Or if you want to apply a SIP, you can apply a SIP of whatever amount is feasible for you. And you can go for a monthly SIP, weekly SIP, daily SIP as you wish, and you can create a SIP. And this way you can invest regularly in this particular fund. So this is a very simple set of options which you can use. Now, moving forward, what are the final thoughts about it? So basically, see, I can't guide you. I can't tell you what to invest, where not to invest. I'm not a registered advisor. This video, I'm creating this for informational purpose. I have given you all the funds as well. But personally, I have invested in Tata Ethical Fund because its returns are good. Its expense ratio is actually good. So for that, I don't get any payment from any funds. Okay, I'm not sponsored by anybody. Okay, this is just the information I'm providing you. So you make a decision based on your right stock itself. So I hope you understood the concept. And disclaimer, you have to listen again that this video is for informational and educational purpose only. This is not an investment advice. So if you want to invest, so invest with your own research and speak to your financial advisor. I hope you love this video. If you like this video, please hit the like button. And this is our new channel of English. So we need your support so that who are English speaking or don't know Hindi, English speaking audience can connect with me from this channel. And I will be sharing a lot of content from now onwards for you in English, so you can able to learn and invest wisely and grow your income. Thank you very much.